Hello, everybody. Good morning, and welcome back to the RationalInvestor.com's daily brief. Dun, dun, dun. It is where are we here? It's Tuesday, isn't it? Tuesday, the 27th of November. Slowly marching through the latter part of 2018 here. Where do we begin? Not a heck of a lot of new to talk about here in crypto land. We can do some review, but the levels basically are holding in. If anything, probably the traders have been given numerous opportunities to take shots off of lows. And there's an interesting weekly level, so we can review that, but not a heck of a lot has changed there. We have today as well, U.S. stock markets trying to find a bottom. Didn't really see any egregious moves away from levels, but interesting price action in some of the swing trades in the swing trader room. We're kicking around gold short idea, so we can maybe take a look at that. Of course, we had the Kiwi short swing trade. Still, we're sort of working away. We were watching a couple alts. Actually, I strapped one on, Doge, just sort of sitting there again. Not really a heck of a lot new going on here this morning. Everything's just sort of treading water. I do have a couple alts that are looking uppy, and I think on balance, if you can put yourself into a buying mode here, and even if it's just nibbling away, I think heading. In fact, one of the guys I like to interact with on Twitter, Jesse Couch, he's a local here in Vancouver. The next sort of local meetup that we do here, Shane and Andrew. I think Shane, Jesse, but Andrew, would be a good idea for you to get to know him and your cohort Riza. So interesting, he actually put out a tweet yesterday directly referencing us saying, I bet TRIers are going to be banging out a shitload of doubles over the next 6 months. So if you can put yourself into a position, this is the kind of market, opportunity is now here, got to be buying when they're crying and stuff. I mean, everybody is bemoaning how they're getting destroyed in the public, of course, in crypto. But as traders, we want to be contrarian. So now actually this is sort of music to our ears. So we can take a look at a couple of those kind of ideas. We don't have Mr. Bear here this morning. I guess he's in and out. I think he's traveling somewhere around the world right now. So we don't have him participating this morning, but maybe we'll have him on later on in the week. We do have the Mayor of Vienna. How are you doing this morning, sir?
I'm pretty good, Brian. How are you?
Very good, thank you. Actually, you know what? I don't know whether... Oh, it's completed. Yay. Okay, cool. So this is kind of a fun PMA. We're going to sort of start today's video off with... Oh, it's still processing, you bastards. All right. Well, I told Amory was one of our people in the... he joined us in the Munich meetup. And I was chatting with some of the Munich boys, and they were asking about the English Gardens adventure that we had on our Munich trip, and we actually did a video. There's Frank, and he actually held the GoPro. Good for him. But I just uploaded this. Christian, if you want a copy of this, there's Christian. Try. Now, why isn't he in a Tesla going down the river? But anyway, so I uploaded this to Google. So Amory, if you are watching this later on, Amory specifically asked if he could have a copy of this. So I uploaded it to Google. I guess they're still processing it right now, but it was a pretty big file. So, but anyway, this is us having fun going down the, and what's the name of this river? Does anybody know what the name of this river is? Anyway, there's Frank, there's Christian, there's Amory, there's the Burgermeister. I haven't seen the Burgermeister around. I sure hope he's doing okay. And then, of course, there's good old Brian, the Canuck, in the sideline. But in essence, this was us going down the what's the name of this river? Does anybody remember the name of this river? anyway, it's sort of a thing that people do in Munich in the summertime. So anyway, Emery asked me to share this and upload this, so I just got it on Google. So if somebody wants a copy of that was in our group, feel free to reach out to me. There's Emery, yeah, little cutie. Anyway, so this is sort of the kind of fun, and actually it's really cool because Albert has asked whether he can start putting together sort of the marketing video of my crazy trip through last summer, and hopefully we can have this kind of footage in that video offering. So anyway, kind of a fun sort of start to today because there isn't a heck of a lot, rocking and rolling in the market right at present. I'm not too stressed about talking market right now. We'll get to it in a moment. I just wanted to play this for everybody. So there's all our TRIers doing the English garden thing. That sure was a lot of fun. So maybe I'll play. I played 2 minutes of it. Maybe I'll play another 2 minutes of it another day, so you guys get the full show. But anyway, so Amory, if you are watching this afterward, it is uploading to Google. I'll give you that link in a bit. And if I'm not mistaken, yeah, the official bikini inspector. That's right. I forgot about that. If I'm not mistaken, I think Alex is planning on going to Los Angeles here the first week of December. So anybody who's in the LA area, specifically thinking about the Riviera brothers, Oscar and Daniel, if you are watching this later on, please let's see if we can get you guys to hook up there in LA. I don't think I'm going to make it down there. I don't know. Andrew, I know you were sort of kicking around the idea of heading down to Bellingham and hopping on a plane. Are you giving that any thought now? I remember when you said that, I was like, well, maybe I'll do that, but I don't know whether that panned out or not. You guys went down 4 times. Holy geez, wow. The only problem is we're running out of time, eh? The 5th is when Alex is going to LA, and that's basically next week. So I don't know whether we can plan such short notice. But, if we'll leave it up to the fates. If the fates decide that that's what we're going to do, then we'll do it. And I'm flexible. If you guys feel like rocking it, just let me know, and I'll hop in a car with you and head down to Bellingham with you. Anyway, so good morning. We might as well just start off with just a quick sort of overview of the stock market. And as I said, don't expect to see anything earth-shattering here. Message really hasn't changed a heck of a lot. If we look at our sort of longer-term picture, we're watching, U.S. stock market. Years that end in 8s, 9s, 0s, 1s, and 2s usually have recessions somewhere in them. And it's interesting to watch how we're painting a little bit of an inside bar here. This is a monthly chart on the S&P 500. What does this top look like? Could it take another 6 months or so to ultimately roll over and start heading down? Sure, wouldn't surprise me. Could we actually see a push to new highs here before this thing breaks? It's a tough one. If we look at something like the NASDAQ and tech stocks, I think you can make a pretty good argument that there's like a brick wall of resistance that's being built up top here now. And, what we should probably do is just simply zoom out and just say, well, is it realistic that maybe prices should top out here? And the bottom line is, when you zoom out, there's the 2008 financial asset crisis. I mean, hopefully everybody can see the beautiful W that came in here, right? Learns this stuff, please. If you're new to this site, this isn't any stuff that I invented, right? Ironically enough, these concepts have been around over 100 years now. In fact, we used to call these Dow bottoms, right? So for Charles Henry Dow, who was one of the founders of the Dow Jones Industrial Average and the publisher of the Wall Street Journal back 100 years ago. So, given that that's where we were 10 years ago, does it make sense for us to maybe take some time and clean all this up? And I definitely think the answer is yes. exactly what does our top look like? It might be as textbook, and as well defined as this W. It might be as simple as just a big fat M. Um, and what's really interesting about this M is that it actually has an outside downside key reversal on it as well. I mean, so we have a very powerful, single candle bar here. We also, of course, have that M. Hopefully everybody can see the big fat M there. And what's interesting is, this is a weekly chart. But you've heard Brian, ranting about Bitcoin and its weekly gaps. Ironically enough, weekly gaps don't really like to be left open, and you could argue a lot of this downside price action is coming back and filling in these weekly gaps, especially like this one here. So my hunch is that we definitely will be trading back at this level at some point down the road. If it's one of these sort of just V bottom straight back up, then I think this actually becomes a new trade location, and probably into sort of the new year. We may be looking for that topping pattern. Maybe like January, February-ish kind of idea. And the process of climbing back up is going to be that whole sort of climbing the wall of worry kind of conversation. But once we get back up into this area, holy moly, all the people, of course, who bought up through here, they're going to want to hop off. And there's just a lot of technical resistance up here. But the problem is do I want to be short down here? Well, ironically enough, I actually had bearish price objectives, and I forced myself, and it was hard to do because when the market gapped open violently like this that day, if you pulled up any sort of news service or any sort of advisory services, they were all saying sky's falling, panic dump, get out. And the irony of it all is that actually, and I literally had to force myself, okay, Brian, you said that you were going to do this. So when we got to this level, follow your damn trading plan and get out. And sure enough, you can see the market's now sort of back and forth, slowly working its way back up here. What's interesting is we did for a while, I guess about 2 or 3 weeks ago, and this might be a fun experiment now. We were thinking about, if we were going to play dead cat bounces, if we were going to play this, technical bounce, is there an options trade for us on something like Apple? And I, $200 is a big fat round number. You can see the hole in the profile. Hell, we just saw a Bitcoin hole in a profile get filled in there. So, regardless of whether you took the level 2 course or not, but, hopefully you've been watching Daily Briefs long enough to realize that, obviously the market's going to run into a lot of traffic around this node. But if we can accept up into here, then odds are we're probably going to have to go all the way up here and fill in all these holes where there just hasn't been any sort of price discovery here. It's just sort of panic straight down. I suppose this is all predicated on, what are the sales for, their new products heading into the Christmas season. And of course, Mr. Trump, Apple does a lot of manufacturing in Asia and China and all that. So Mr. Trump and Mr. Z's saber rattling about trade wars and stuff, I'm sure that's weighing on Apple as well. What I did find really interesting, which sort of jumped out at me this morning, is hopefully everybody can see this big honking hole in the charts over here. And notice how they're bringing price right down and trying to basically fill in that monstrous gap. Honestly, I didn't think we were going to get all the way down here. I thought we would, pivot off of this gap. But it sure looks to me like the market's going after this one. And what might be interesting, too, is if we put like an 88.6 on here, does 88.6 happen to line up with that gap? So there's 88.6. And gee whiz, wow, look at that. Isn't that incredible when that happens? So 88.6 happens to be lining up with that gap level. So, I wouldn't be surprised if there's like one more sort of like little FU kind of move in here just to wash out any weak, newcomers. As well, too, notice that we don't quite have a divergence here yet in Apple. And I wouldn't mind a nice little counter turn rally and then a dump to new lows, fill in the gap, close it nice and down. And that's on a divergence. You can see that we do have Willie officially stupid. So no doubt about it, you're way too late to be a seller. And if anything, this is sort of telling us that, hey, let's start looking for indications of bottoms, getting ready to play the bounce back up. And so then, sort of the final piece to this, and this is what I absolutely love about TRI-SOF, we'll just pop on over to the options market, and we'll just simply ask whether the options boys are going to give us a trade here. And what was interesting is we were looking at the stock in here and pricing options, and they just weren't attractive from a derivatives perspective. So really, not a heck of a lot to do. If I look at now, I'm going to do like total TRI-SOF. And if I wanted to buy 6 months of time, these things are still way, way, way too expensive. So Apple, looking at the June series, the 200s right now are sitting at $6. Ugh, yuck. So certainly not a TRI-SOF kind of trade. If you wanted to play sort of a short-term bounce on this thing, though, I don't mind the idea of maybe, sort of gunning for, Christmas rally. Stock market, we're sort of thinking maybe it tops out January, February-ish. So if you did want to entertain the idea of playing this on the short term, we should keep an eye out for things like the $200 call for, and this happens to be the February expiry. So we'll keep an eye on this, but I definitely don't have a TRI-SOF, but you can clearly see heaviest open interest here is the 200s and the 230s. So it must be, considering the equal amount, must be some sort of spread trade going on there. And then if we want to think about where's a floor, where do they figure the stock really is probably going to bottom heading into that February expiry, notice that the heaviest open interest on the put options is at 200. So I think probably into sort of the new year, they're going to want to bring this thing back to sort of that median level. 50% of this dump is 201.95. That would basically imply $2 of intrinsic value on those $200 calls. So let's keep an eye on this. If those options get around $1, $1.50 or so, I might be really interested in taking a swing at that, but definitely not a TRI-SOF. We'd have to really see this thing crank down here to get SOF principal option numbers. So not quite a slam dunk easy options trade, a little bit trickier, but I really do like the idea of coming into major technical support here, filling in the gap. We are officially oversold. Now we just got to see signs from our raw momentum indicator, and also OBV and Willie. Can we get W's coming in here? And of course, on a nice divergence in MACD, that would be super sexy. If anything, the short trade, right? Everybody should look at this and go, wow, Brian, look at that monster div there. And also, really, you could argue that this div has been forming for a long time. So not a big surprise to see that the prices come down. We just don't have that div yet on the bull side for us to get too excited. So just watching and really just kind of talking out my butt here this morning. It was interesting. We had a conversation with another gentleman this morning that was asking about, NVIDIA and AMD relative to Bitcoin. And I actually put this chart out a little while ago. I actually think Bitcoin right now is actually a great leading indicator. So, I think that Bitcoin ran up first ahead of the stock market and ahead of the semiconductors. And actually Bitcoin topped, you can see before the semiconductors actually topped. You might argue with the break here in the price, a lot of the semiconductors, NVIDIA, AMD, all that, they were still seeing buyer demand come in for their products, so their stocks were getting bid up. But as this sort of bubble popped and we've deflated the bubble now, the semiconductors started to roll over and broke in earnest. And then finally, the last sort of piece of the puzzle is the major big stock indexes. Now, the interesting thing about this is they always say that the big indexes move last. So in a weird sort of way, you get sort of venture, and I would still consider crypto very venture capital. Cutting edge, it's leading. We say that the SOX index actually leads the stock market. So it breaks, and then finally, the final shoe to drop is the stock market itself, the broader index. And if anything, this kind of looks to me, kind of like what we said on NASDAQ, we could see a rally up top. Does that kind of look, I don't know, does anybody see a formation here that's kind of jumping out to them? To me, I see a head and shoulders here. So I don't know how deep we have to go against these lows. You can see where they've done it now, but I really do like something like that. And keep in mind too, if this stock market is rolling over, getting ready for recession, the top is not going to be just one day. It's actually going to take weeks to play out. And also remember too, zoom out, right? And you can see how long the 2006, 2007 top took to develop. And really, I might argue that if we were looking sort of comparison wise, does it make sense that, on a relative basis, it kind of looks like we're right here? What do you think, guys? Does that sort of correspond? You see this sort of topping out pattern. Are we going to head and shoulders? Actually, no, you know what? No, I'm going to say that it looks to me like we're right in this window here. So, this is kind of what we got to be thinking about for the next few years ahead of us. That's pretty crazy, eh? So get ready, folks. I would, if you are in the working world, I would go and kiss your boss's butt. Tell him it's peanut butter. If you're a trader, of course, you want to make sure you have a big cash hoard sitting around, so you can just sit and just absorb. Well, not absorb. That's not the right word. Just basically ride this out, right? But no doubt about it, the next few years for the broader economy and the stock market, it's going to be challenging. If anything, what we have to say now is we have the wind at our faces right now. We don't have the wind at our backs. Through this period, ironically enough, of course, the central bankers and stuff were, a lot of you guys got interested in this space through this period, right? Because the central bankers and stuff were like throwing bags of money at the market. Please don't break down. We have to grow. We have to grow. Here, we'll delete the shit out of our currency so that we make sure that we grow, blah, 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 right? It kind of looks like this was like maybe a midpoint. Actually, it'd be really interesting to do an AB equals CD off of that. Just out of curiosity. Oh, hello. What a coincidence. So I don't know whether you guys can see that, but it looks like there was a pretty important pivot right here. It'd probably be interesting too if we went back and looked at like Fed policy and stuff. Like this was probably when they started QEs and that kind of thing. And of course, of late, all the Fed's been talking about is just basically, taking the punch bowl away. How many rate increases can we do, right? Can we reduce our balance sheet? Blah, 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 blah. So, this is an excellent anecdote that the market's got the wind at its face right now. And as I had sort of told you guys, the great part about for you guys is that you can actually look at the broader market because they've got to get ready for this. They don't realize, like the public doesn't realize what's coming. The great part about crypto, of course, is that you guys, because this is a leading indicator, you guys have gotten a crash course in what does corrections actually look like. And ironically enough, when this starts going into free fall, that's when the Fed will start, helicopter money, all that kind of bullshit again. And that's probably when Bitcoin bottoms and starts to work its way back up. If anything, you could even, there's got to be some sort of correlation between Bitcoin and QE, right? And if you see QE ramping up, we should see Bitcoin bottoming and starting to firm. When we see the Fed tightening up and trying to reduce the balance sheet, get rid of QE, all that, that's when we should see Bitcoin sort of unwinding. So we'll see how that plays out. Only time will tell. But, the writing's on the walls, and we've been talking about this a lot. So. Let's see. What other big pictures can we talk about? So a couple things that interested me, if you're kind of thinking that maybe there should be some sort of turn back up top here, I really like to follow the market internals. And this is another reason why I sort of wanted to cover my NASDAQ shorts, was because of this big W in the advanced decline line. And we don't often see this, right? You remember, through the summertime, that's when I strapped on my NASDAQ shorts. And does anybody remember? I was talking about, look at these M's, oh my God. Anybody remember that? I hope you did. I don't know. Maybe I'm just talking to myself here. Anyway, the point of the matter here is that into this most recent dump, the advanced decline actually W'd. And you can see that the number of stocks actually advancing in the stock market is really ramping up here. So ironically enough, for the broader market, does it make sense that they're actually thinking bull again? They're back on the bullish side. To sort of dovetail that, and there's a guy on Twitter that I like to follow, Trader Stewie. And he's, watching lots of charts and looking for breakouts and all that kind of fun stuff. What did I want to show you? Russell 2000. Where is it? Russell 2000. Around here somewhere. Is it over here? Where are you, Russell 2000? You're around here somewhere. Here it is. We've been sort of bantering about, what does bottoms look like? And if I was going to play a stock market bounce, do I really want to play the big stock indexes, or do I want to play something that's got a little bit more room? I kind of like the idea. I'm really warming to this trade idea. I've been buying lots of venture cap names, VCIM names. In fact, we should probably do a site-wide sort of notice. We haven't done in a while, but a couple of our sort of keeners are back in town. Stan the Man, Stanimal, was one of our sort of core RRSP group guys from last winter, and he's back in town, and actually he's got a couple of really cool ideas. So we're going to have a meeting, an RRSP meeting tomorrow night, Wednesdays. That's usually when we did them. So anybody who is interested in investing in the stock market, interested in especially for the Canadians, do you do your RRSPs? With specific focus on the fundamental models. In fact, and I don't mean to give it away, but it was such a great idea that I'm going to. And the irony of it all is I went and threw a bid in right in front of Stan because I like the idea so much. He's like, "You're front running me? No way, man! You jerk!" But and look at what they're doing, the sons of bitches. Look at this one, right? Very interested in this stock. Lithium Energy Products, LEP. And if this was a altcoin, I mean, I hope you see the similarities in our conversations. But the long and short of it here is, and it's tough to see, but heading into tax loss selling season, this is exactly what I would expect to happen. So they bring this stock down, basically just giving it away. And I absolutely love this kind of investing. It's venture cap. It's sort of my days as a VSC stockbroker. So this doesn't appeal to everybody. I'm going to fully state that right off the bat, but we've had some, you often get some just insane percentage returns out of these little junior stocks. So if we just quickly look at the numbers now, clearly, the stock has basically doubled here in the past week. So I'm certainly not going to chase here. But 12 million shares out. Love it, right? Beautiful numbers. And even now with the stock doubling in price, it's still trading below its book value. So the actual value of the assets on the books, it's still trading below what those assets are. Rolled the stock back, shares to directors, options for, shares for debt. I don't know whether they did shares for debt. So, we'll probably talk about this tomorrow, but Stan did just a great write-up on this thing. Just a fantastic idea. So I'm in here bidding at the gap, and if I'm lucky into year end, they'll give me a fill here. Tough to say, but when you just look at a chart like this, like, holy Jesus, you can easily see a rally back up into here into the spring, which should give us more than our fair share of profits. So definitely lots of really sexy little names that have caught my attention here. We are very like this one here. I love this Timberline. Same sort of logic. This is just back in May of last year. Here's May of 2018. Hopefully everybody can see the technical bottom that's trying to come in here. Got filled a little bit on this gap fill here. Got another bid working off of these lows. So I'll see if I can nibble in away on this one. So, why am I mentioning this? And of course, in the crypto space, I bought this little one, right? Basically right where the directors are long. I bought this little one below where the directors are long. I'm actually very interested in the small cap space for a trade. And as you can clearly see, we tagged the low of value. If we can accept here and start moving our way higher, hopefully everybody can see the top of value just on this image right here is up in this area here. And of course, there's good old Mountain Man. There's some juicy gaps up here. So I am watching this IWM. And if I'm going to do a trade in the stock market, I have a feeling that this is the trade that I want to do going forward. So keep that in your mind as well. Okay. I think that's probably all I want to talk about with stock market. Maybe, we should probably just check in on the bond market. We'll know that the top is in. Get ready for recession 6 months down the road when these spreads start to narrow and invert. Interesting battle going on in the inflation deflation war. We've said repeatedly that I don't like to listen to government speakers tell me if there's inflation or deflation. I like to listen to the market. This is a really simple study. All it is just comparing the price of the TIPS, which are the inflation protected government bonds. So if there is an inflation problem, the TIP has a built-in premium that will pay you more in interest depending on what the sort of stated inflation numbers are. Versus the TLTs, which do not have that inflation protection. So why would I watch this? Very simply put, if the market believes that inflation is a problem, they will pay a premium for that inflation protection. If the market doesn't think there's inflation and it's not a problem, then they will not pay up for that inflation protection. Remember, it's an added insurance policy on your bond purchase. It's going to cost you money. So, this is money. So if people are not worried about inflation, then they're not going to spend the extra money on the TIPS. So we've just literally watched this over the past few years. And in essence, we went into our deflationary spiral, 2013, 2014, 2015. We ultimately made our lows. The bond market ultimately made its highs. No inflation in the system whatsoever. Baby boomers all running into the bonds, right? Bidding prices up to ridiculous levels. then that's done, and then we start making the transition out of that sort of deflationary environment. And we'll know that sort of inflation is a problem when we actually start to see these people pay a premium for the tips. It's interesting how we basically came right up to a structural level. And I might argue, if everything was just sort of business as usual, tickety-boo, that this would have ticked higher. In fact, you can even argue that this is a nice little AB equals CD. Right, boobity-boo. And boobity schmoo. So my hunch is we want to head this direction, but did something happen in the world here recently that might have kicked the shit out of the inflation issue? Is there anything that's typically inflation proxy that has just gotten its ass kicked lately? Aside from Bitcoin. Oil, very good, Will. Right? We always say that the biggest outside cost for businesses doing business, they say that labor costs are usually about 2/3 of businesses' expense. And then the next big thing that's a big expense for them is energy, right? Paying for electricity, paying for gas for trucks on the road, paying for, airline tickets, transportation, moving around, goods and services, right? Or, remember at the top when oil was ramping up here, the transport stocks all started falling apart. And that was our big sort of tell, hey, get ready for a stock market drubbing. Well, the long and short of it here is that basically energy prices have almost fallen in half here. Is that inflationary or is that deflationary? I would argue it's deflationary. And of course, we're at the end of that long commodity cycle. So really, we actually should have been expecting this to happen. So what I think's happening here now, markets never move in a straight line forever. At some point, we're going to have to do our dead cat bounces and counter trend rallies. And you can see where the 200 SMA is. You can see where 38.2 is. Keep it really simple. Mr. Gann would just say, can I please have a 50% bounce? So where's that? That's right at our line here. So I wouldn't be surprised to see energy prices back up into the low 60s here at some point over the future. And also, too, that's the market structure fail level. So I think that makes sense. But no doubt about it, here in the short term, this is extremely deflationary in the short term. Yes, we have Willie Stupid. Yes, we have a divergence. Really, all we need is some sort of structure here to frame a trade. I wouldn't be surprised, if actually Q1 2019 actually sees a bounce in energy. But the point of the matter is today, with regard to the inflation deflationary proxy, does it make sense in the face of that falling oil market that the market itself is sort of said, okay, phew, we don't have to worry about inflation so much. And, this, hopefully everybody can see the cute little double top right here, right? But this is, it's interesting because, I pull up things like, and I don't, I often do this. I should really grab these damn headlines. There's these kind of headlines, right? Fed talks is changing so quickly that markets may soon expect a Powell put. What I'm hearing is that, the Fed's now, especially seeing that energy move, is kind of like, okay, things aren't nearly as inflationary as we were worried about. Maybe we might see the Fed back off a little bit here on their rampant rate increases. And there was an article that I saw this morning, but of course I don't have it here. But in essence, it basically said that the Fed governors coming out, Fed speech, talking, are saying that the inflation rate now is below their targeted window. And hopefully, with this conversation about oil, and does it make sense? There's sort of that inflation target window. They would like to bring inflation back a little bit, please. You could argue that, the whole reason why they cut interest rates and make it extremely low is to try and bring this inflation back. And the point that I'm trying to make here, I'm very long-winded about it, is that in essence, this break in energy prices should give the Fed a little bit of a reason for pause. So I just find it really interesting that we're starting to see that in the conversations out of things like Fed speakers, that maybe things have gotten a little bit ahead of themselves, from the rate increasing sort of pace, and they actually have an excuse now where you might even find in December maybe they raise rates, but they say we're now officially on hold until we see new data to sort of justify continuing to raise rates. Any way you shake it, as I'd said before, and I've said repeatedly, we'll know when the sort of next recession officially is on its way, when we see our yield curve invert. It's not that way right now, so I don't think we're there at the point where we have to basically get ready for the dump. And if anything, given this and given the fall in energy prices, I wouldn't be surprised if there's actually one more sort of push up in the stock market, which forces the yield curve to invert. And then that's when we actually get ready for the big dumpage. And, considering our conversation about S&Ps here, considering our starting conversation about if we wanted to be short tech stocks and NASDAQ, where should we be hunting? I don't think it's here. I think if anything, I would like to actually see them bring the market back. Things like tech. I don't know whether tech can make new highs here or not. And really, I don't even think the stock market can make new highs here. But I definitely think that we need to go through a period here of, well, things aren't so bad. It's all good. Everything's fine, right? Yada, yada, yada. And then get that curve to invert, and then boom, away we go. Okay, that was pretty long-winded. I apologize, everybody. I hope you got some value out of that. Swing traders. I thought it was interesting. The only market that really sort of set up for swing trades here recently were a couple short ideas. The first one, of course, was our Kiwi. Really pretty divergence here. Willie Stupid, really pretty M. I do note it. I think I remember there were a couple guys in the swing room saying they were actually going to work orders at reload zones to get short, which, would have been sick-ass trading, nice little mountain man tag there for the swing traders. The M here seems to be just working away. Could you have moved, stop to break even, which would be technically up here, and have you been washed out yet? No. There's the move stop to trailing level. So, it's just working away, doing its thing. I think if you came back to your scratch level, probably best to hop off on that, though. And then one that I didn't get in because I didn't really have a window to do the trade. The numbers are actually extremely small. This double top. I mean, first off, let's frame the setup. So can everybody see the divergence in the gold market as we made new highs here? You can see the MACD histogram did not make new highs. So that's number one, right? We got Willie Stupid. All right, rock on. They actually ended up taking the market up into reload zones. Awesome. Trade location. And then they just sort of parked it here, right? Notice rally to new highs. And this one rallied to new highs, backed it off, then came back up, made a new high, so no M. But here they rallied it up, backed it off, rallied it up again, and then slowly rolled over. So I don't know whether you can see that. Can you see that double top there? It's kind of tricky. I suppose you could argue same thing as the Kiwi, right? You could have taken this low, done a fib back up top, and said, okay, I'm going to hit the I'm not going to get in on the double top, but I'm going to hit the reload zone. And sure enough, that's what that rally window was right there. And you can see how actually this trade has just hit its objective. Isn't that incredible? Riza, do you see this shit? Riz is brand new to the site, so I love picking on him. And of course, he's got such a handsome picture. Look at him. What a handsome guy. But this is the kind of shit that I need to train you up on. As soon as you get good at this, Riza, right? There's no stopping you. And actually, I would really like if we could send. Riz has taken a couple of your scripts and he started taking, to the next level. Not the next level. Your level's fucking awesome, Sam. Don't get me wrong. But Riz has done some further work on those scripts, and I wouldn't mind if maybe the two of you we could book like one of our. I think we've got Adam said that he's going to do a presentation tomorrow, but I wouldn't mind if maybe the two of you could do like sort of a couple presentations. Sen sort of set up, this is how I wrote the script, and then Reza said, okay, and this is some of the adaptations that I made. But I apologize for picking on you, but love you, dude. This guy's like fucking he's like a living computer. I mean, it's remarkable. So anyway, the point that I would just make is Riz is doing some great work on the site, and I just don't know whether this would have been enough money to justify the trade, because the short level there is 12.25 and the profit objective was 12.13. So it was like, basically about 10-15 bucks. Every dollar movement in the gold price is $1. So it's not really a hell of a lot of movement here in the gold price. Was it enough to justify a swing trade? I'm going to leave that up to you. But I definitely think that, the El Tangonator model, I think it worked here. It's just I don't know whether there was enough of a profit margin to justify doing the trade or not. But anyway, so gold shorts, commodity proxy currency shorts. Geez, I suppose we probably had something set up here on the Canadian dollar. Canadian dollar just looks like a train wreck. Try to understand, guys. There are three different, and let's see if you guys know them. Alex, this would be a good quiz question for you. There are three commodity currencies in the world. What are they? Obviously, I've given you the answer. One of them is on the screen right now. Okay, I don't know about the Kiwi. The Kiwi is kind of a fun little side bet. Yeah, I suppose the South African rand. I guess what I was going for was the Canadian dollar, the Australian dollar, and the Russian ruble. Everybody, of course, forgets about Russia, but technically they are basically a commodity country. And so we can actually follow their currencies and get a pretty good idea for what sort of the trend in commodities is. What do you think, guys? Is this an uptrend or a downtrend? Let's keep this as simple as possible. I think it's pretty obvious, eh? Yeah, it's a downtrend. And then, this is the worst part about it. Check this out, guys. Can we actually see, if we zoom out on the Canadian dollar, can you see where the top in this market came in? It's actually a long time ago, eh? The irony of it all is that you could make the argument that Canada basically told you to get out of commodities here. This is back in like 2013, right? And of course, the oil market is nowhere near these old highs. But, I mean, that would have been just the sickest trade. Here we are sort of floundering now. We made a V bottom here. We all know that V bottoms are not sustainable. At some point, we got to go down and test that. It is interesting that they put in this long channel here. And you might argue bull AB equals CD. I just don't know whether that's been hit or not. Yeah, that's a tough one, eh? But, it's pretty close, right? I mean, it's pretty close. If you're just looking at this commodity currency right now and just saying, okay, what is the general tone? What are we supposed to say if we ever see the market smiling at us? Oh, boy, what a mess. So, I definitely think that the tone in the commodity markets has changed. The bulls would really like this low here to be held. It doesn't look like that's going to be the case here. So, I think if anything, if you're a bull, you just got to temper your enthusiasm and cool your jets, as we like to say. So, energy prices are broken. interestingly enough, and I usually I see the gold market likes to bottom about the middle of December or so. So we'll see how deep this goes. But I do remember, and we'll have Thomas on tomorrow, I suppose, or maybe the next day after that. I don't know. And we'll get sort of an industry vote on what their expectation for gold prices is going forward. But I got to tell you, looking at the crude oil price, looking at the Canadian dollar, it's awfully tough for me to make too big of a bull bet in the gold space right now. Very tough. So, like I said, swing trade, and that's sort of where we started this conversation. I think there was a really cute short here. Right now, I'd just be sort of, okay, well, that's done. Back on the sidelines, twiddle your thumbs. Stocks look like they could work their way a bit higher before any sort of swing ideas come in. Looks like the bonds, we were sort of talking about this the other day. The bonds looked like they were topping out. We definitely have divergence. We have an M trying to come in here. I think probably your trade now comes in on break of this trend line, boobity boo, right? And of course, we got the Fed meeting coming up here in early December. And also, too, this should be a fun side project for you. Who can tell me who uttered the words irrational exuberance? And then what was the date that was said? So, Will got it. Josh got it. And what I want you to do is I want you to try and play Connect the Dots. 1980? No, not that far back. So the point here is that usually the first week or two of December, there's usually a bit of a pullback. And of course, we've got a Fed meeting coming up early in December where they're expected to raise interest rates. Maybe they come out and they still say inflation's a problem, and then that's what triggers this bond trade. But it hasn't come in yet. But, remember we did that big presentation on the bond market a week or two ago? Exactional exuberance. That's good. Thank you, Joshua. But the point here is I think there's a trade, kind of like the gold. I think there is a swing trade coming in here. It just hasn't come in yet. And, of course, we got that big Fed meeting coming up here shortly. Maybe that's the catalyst the market needs. But that swing trade just didn't fire. So it's just the way it goes. All right. So on pause, waiting. Crude, it was oversold. No real divergences here yet, though. So just sort of still pause. Gold, we just talked about. The euro, interesting. I have heard a few people saying that they're kind of smelling a trade developing in the euro. I do like the idea. I mean, I've heard recently, but I'm not the hippest on euro FA. But I heard recently that Italy sort of avoided some sort of disaster there recently. So maybe the pressure is off Italy. Regardless, Willie is stupid, so we should definitely, have our eyes peeled. Can you guys see that we've got a potential divergence trying to form here? It hasn't confirmed yet, but potential. So I did hear some people talking earlier about hunting long setups on the euro, swing trade, right? I think that makes sense, right? We're coming into key levels. I don't think it's a good idea to take the trade ahead of the Fed announcement. I think it's probably best to wait for that Fed announcement to happen, and that's probably what sets all of this up. But we're coming into location. We've got Willie stupid. We're just waiting now on the divergence to confirm itself. And then I'd be going into hunting mode, probably look for a test of like trend lines going back to here or something. We'd probably do there to there to there. right? And, Leanne James set up. If we got structure on the other side of this trend line, then that's bullish going forward. I would probably say something along the lines of if this all does crystallize, we get a nice bottom come in here on a divergence, maybe we could be looking for something along the lines of move up against these highs. If we just do 50% rules off of this structural top up top here. Yep, that makes sense. Can you sort of see how the AB equals CD would take us right up into, see there's a cute little wick up there that needs eating. There's probably some juicy gaps along here. So let's keep an eye out for this. I think we're still a little bit early on this trade, but we'll keep an eye on it. Okay, and yen, same sort of thing, right? Basically the same, and I think I heard people in the swing room talking about the yen as well, same sort of thing. Market's stupid. Potential divergence forming, only potential right now. Coming into trade location. You can see the last little swingy ding trade produced a pretty good trade there, I think. Bang, right up against 50% level. So really shouldn't have surprised us that happened. So reload zones, 61.8, 78.6. There's a nice little, doji low there. So let's see if we can get divergence to develop up through here. But I think you probably could find another long trade. But it's still very early on these, I think, guys. You just got to be patient. Just slowly wait for this to develop. But I definitely like what I'm seeing there. And I did notice in the swing trader room this morning, some people were talking about how euro yen's kind of looking like something might be setting up here. So still a little early, but let's keep an eye on it. Okay, so we talked about stock market, big sort of things. We talked a little bit about junior stocks. We talked a little bit about sort of intermediate stocks. The web page, Sjord's working away on the signaling system right now. So we're not quite at the point of actually producing tradable signals off of this just yet. But Sjord's just slowly working away on this. I wouldn't be in a big hurry here. But there are a few new names if you want to hunt location. We just have the very simple 13 EMA cross, so if you see structure, divergence, like we showed you off of that little Moody's Corporation, those kind of things, I might be looking through these through the rest of the day. And if I see anything interesting, I'll give a shout out to you guys. We'll talk a little bit about Bitcoin here. There isn't a heck of a lot new that's happened here today. So as a result, I didn't spend a lot of time in today's offering talking Bitcoin. I think the weekend show, we talked Bitcoin into the ground. And yesterday I talked quite a bit about Bitcoin. Obviously we had this really important weekly gap level. And what I find fascinating is with Bitcoin's sort of universal. It doesn't matter whether it's, in Asia, this happens to be Bitflyer. So this is Bitcoin priced in yen. And the interesting thing is if you pull up a chart of Phoenix, it looks almost identical to this. So interestingly enough, I think a lot of the similar price patterns that we see off of Phoenix, I think actually Phoenix is taking more of its cues off of the Japanese market, because I see these markets move almost in lockstep. I'm not going to sugarcoat this. We are at a hugely important higher time frame level. So to see the back and forth off of this higher time frame level makes complete sense. We showed you this chart recently, right? There is that weekly gap level. Nice little doji. There's a bit of a tail, this old breakout high. And remember, guys, we said this tail's low on stamp is 29.72. So sitting at 3,600, I'm not going to sugarcoat this, guys. We could easily see a dip of like $500, $600 here. Just be prepared for it. What's cool is, before we loaded this up, I've been talking a lot recently off of just the price action, but it was really cool. Alex and I we're just looking at momentum earlier. Can everybody see the divergence that's starting to build in earnest here now? Keep in mind, this is a weekly price chart. This moves like the open steamships on the ocean, right? They move incredibly slowly. I thought it was interesting. I saw somebody that A. Pompeo guy, and I better get his name right because everybody in the space seems to love him. But he was basically saying that he figures that we're now starting to get below sort of value on Bitcoin. You know what Brian says with regard to value, so I'm not going to touch that right now. But the point is that they said RSI's at an all-time low as well. Yeah. They're basically saying that, one of the tweets I saw this morning was, the current Bitcoin correction is 50 bars old. And the last 2014 Bitcoin bear was, 52 bars. So, are we within weeks of some sort of major pivot? It was interesting. I saw somebody say that this correction from top to bottom was like 85%, I think. And right now we're at like 81 or 82%. So I really do think that we're within weeks of some sort of major significant bottom. But here's the problem, guys, is that, and actually I think Alex reminded me this morning, Bitcoin cannot either end an up move or end a down move without some sort of horrendous event horizon, right? And the irony of it all is this candle, which looks like nothing to us now, this was a 50% drop in price from 300 down to 150. 50%! So, the irony of it all is that, yes, I think we are very close to some sort of historical significant pivot. But the problem here is that Bitcoin can't finish a move without some sort of big fuck you. I mean, get used to it. This was a fuck you to the upside, and I just showed you the fuck you to the downside. That Rizza, you like that one? Now, is that one that you can go and take? Remember, and what's really interesting is Rizza and I, we went to there was Doge conferences and stuff all over Vancouver, right? And there were these fucking nose in the air, I'm better than you, venture capital funding guys there. And I was kind of laughing at them because they were like trying to, start up their sort of crypto venture cap model. We're going to own this space, of course, back up here, right? And I was joking with them, right? And they had no sense of humor whatsoever because they fucking thought so much of themselves. So, the irony of it all is, can we go to them and say, well, you know what the end of the Bitcoin move is going to look like? It's going to be a big fuck you. Can we go to those kind of people and say that? And yet that's the trader's world, right? So, I definitely think we're way closer to the bottom than we are the top. Don't get me wrong. Do you guys want to slap in the face to sort of throw some cold water on your face here this morning? Do you want this? I mean, I'll give you something that I think actually is really cool because, ironically enough, in 2 weeks, the level 2ers are going to be jumping into this shit full bore. But I'm an old fan of this kind of charting. Has anybody ever seen this? I would be willing to bet, like Rizza, have you ever seen a point and figure chart before? Have you ever used point and figure? So this is Andrew. You're in the level 2 right now, right? So, this is the kind of stuff that we're going to be looking at here in a few weeks. But I don't know whether you guys can see this. Point and figure charting, this goes back like over 100 years. This is the way that they used to try and track lots and lots and lots of stocks without computers. Yeah, it is ancient, eh? And it's very good. And what's really cool is that sites like stockcharts.com actually have point and figure engines. And I don't know whether you guys can see this, and I even posted in the lounge this morning, bearish price objective tentative 956.04. Ouch. So, the old school. I mean, look how far down this goes. Holy geez. So there's the price objective right in there. Ironically enough, if you draw a trend line in point and figure terms, there's actually the trend line for Bitcoin right now. Isn't that remarkable? So we're going to be teaching the level tours this charting technique in a few weeks after we deal with GAN. But, and remember I just said a moment ago, right? If we're fluttering around 3,000, and then all of a sudden Bitcoin just pukes out and has like that 50% drop, total capitulation, sky's falling, right? Maybe that takes us down to that, 1,000, 1,500 level. We stay there for like 10 minutes and then just jackknife our way right back up. But it's, I just wanted to bring it to the community's attention that, these old sort of 19 cent, oh, look at that, Kurt just shit his pants and left. Sorry, Kurt. But, long and short of it here is there are interesting charting platform and charting techniques that are still suggesting that, hey, we still got a little bit further to go to the downside here. And Alex, as Alex has pointed out, and reminded me this morning, Bitcoin has a really hard time finishing a move without some sort of big horrendous FU. I do there's a couple things that I think are really good about this. Number one, Willie is back being stupid again. Remember we've told you guys in the past, anybody's taking a level one, really good information here. Willie being stupid unto himself isn't enough of a justification to take a trade. There's a weekly chart. And here you can see that, yeah, the initial dip into stupid did produce this rally here. But we're back into stupid again. So that's good. You can clearly see massive divergence here. You could even argue that this is confirmed. I don't really like these kind of divergences, though, when you have sort of a soft, shallow divergence. Brian, right? Grade 3 English class, what does a W look like, right? We really want to see a nice test of these lows for us to really believe this is a W. So that's a bit suspicious. And, if you're, working forward in your life, and you're, practicing trading, keep an eye out for this. If there's something you want to learn, what did I take away from today's daily brief is that we would really ideally like these W's to look like a really serious W. When you get sort of this shallow test of these lows, that's a bit suspicious. And then the last thing that I'll say about this, I do like the fact that this dump here, you can see the volume ramped up, but we did not break to new highs here. So that's actually good, right? And it just goes to show that the selling interest is backing off. Like if this candle had been to new highs, then I would be, OBV would have totally broken these lows. And I would have been like, this doesn't look good, guys. But the fact that this wasn't a new high actually leads me to believe that we're getting close to the end of this washout. So. Okay, well, lots of fun Bitcoin stuff. Little ones, we strapped on fun little trades. I still got this long setup on Doge working. Nothing's really changed there, so I'm not really doing much. I've been watching Quacker here closely. You can see Quacker keeps coming up to this 34 level, but can't quite break through it. 34 is the magic number on Quacker, so I'm going to keep an eye on him. And then if we watch like little ones, look at this little son of a bitch, right? NEM. somebody had said that there was like a major hack or something like this, but guys, this is the perfect example of buying when they're crying, selling when they're yelling. Does everybody see this tail? Wicks and tails like to be eaten, right? They just brought the market politely right down into that tail. Hello, cute little W. Away we go. I mean, this is everything that I'm trying to teach you guys. Riza, do you see this shit? This is the shit. I know, I used to always, talk about Kevin and Joshua. I've definitely gotten to the point where I know that Joshua and Kevin see this stuff. And now, my friend, you're in my gun sights. So, don't feel badly. I used to, like 6 months ago, go, Kevin, do you see this? Joshua, do you see this? Well, I already know that they see this stuff now. But Riza, I need for you to learn this, because like this is everything that I try to teach. Stupid idiot public coming in and buying up top. Now the market, of course, is washed out. Nobody's interested in this shit. I'm seeing DI Synthetic. I hope I'm not butchering your name, dude. He's saying I vouch for NEM. So he says NEM is a winner, by the way. So, put it all together. And this is, if anything, what I'm hearing is the dysthenetic or whatever I'm dyslexic. So dysthenetic plus dyslexic equals trouble. Anyway, the point that I'm trying to make here is that, this is the kind of market that we should be interested in. Dis is fine. All right, I'll just dis you. This is a weekly chart, so don't everybody go out and fucking mortgage the farm on this, right? If anything, what I would suggest is you can see here's the daily chart. Joshua has been doing a great job showing us how markets bang up against the 200 SMA and then calm down a little bit. There is that big weekly W. That son of a bitch is in there solid. And if you did want to sort of, participate, join the party here, I would just simply, let this thing finish its move, draw your reload zones, and start working your bids. Can you see just off of this range here? Here, why don't we take it just from that bottom there, right? So the distribution of volume, you can see, if we draw this right back against that low, there's the reload zone. There's actually your daily double bottom. And anybody who bought can you see, Riza, if you had bought the daily double bottom here, you're just laughing, right? Great example of, you just buy the W, risk the break of the bottom of the W. And at this point now, you should be, if not, what is that? That's 1,500. So we're at 1,900. So you already got yourself about, about 30, 40% return. And if you're just trading this, you're just working your stops against this. Me personally, I think you could probably get a double out of this pretty easily. That would be a rally up into this area here. That might be a bit aggressive for this move. Interesting how 3,000 actually is the POC off of this entire range, though. So, yeah, it wouldn't surprise me. The guys that took the longs off of here, they're going to get a double. And we often see that. It's very normal. In fact, here's another one that I really like here. Look at that son of a bitch go, eh? And what's really cool about this is look at this OBV, guys. Do you see how all the money poured into this thing? And ironically enough, they brought price basically right back down to that original bottom, but no money is actually leaving the space here. Isn't that incredible? So it just goes to show that a lot of this is just bullshit. It's just literally people being forced out of the market against their will. But the big money that actually went into this, they're not really doing anything right now. So it's just yet another example of, is opportunity nowhere or is opportunity now here? And I would argue now is the time when professionals are stepping up and starting to put some money to work. Okay, I actually didn't think I was going to have enough material to talk about to fill an hour here this morning. But what do you think, guys? Was that a good offering? Did anybody get any value out of that conversation? I hope so. Thank you, Joshua. Oh, Jonas, you appreciated that? Good, excellent. Okay, cool. And everybody knows what their assignment is, right? What was your assignment? I gave everybody homework today, and you all have to learn this. And the weird part about it, of course, is that I remember like it was yesterday, which is scary. It freaks me out. But anyway, well, that's your number one job, Jonas. But don't you remember what my assignment for you today was? Is a bit of a history lesson. So everybody's got their history lesson, and great piece for your journals. Because we're coming into this, and every damn year the same thing happens right around this time. So I'm not going to give you any more hints, but everybody should know what their assignment is. And if you need help, go back and watch the video back. Joshua, smarty smart. All right, let's leave it at that. What do you think, Mr. Mayor? Did we do a half decent job for these people?
As always, Brian.
Pardon me? I didn't quite hear what you said, but I'm going to assume that the mayor was okay with what I did.
It's the mayor's approval.
Oh, we got the mayor's approval. Right on. Excellent. Okay. Okay, guys, why don't we leave it at that? Have yourselves an awesome rest of your day. Slow and steady wins a race. Lots of opportunities out there. But the long and short of it here is you know what your number one job is to do. Let's go out and have some fun in the market. All right, guys, all the best and a big bye for now.